Today, we're going to discuss some signs the chances of a recession are shrinking. Hello, and welcome to Money Talks. My name is Ken Wink from Summit Financial Consulting. If you'd like more info about what you hear during the show today, give us a call at 586 226 2100 or visit us online at www.summitfc.net. When you're at the website, make sure you check out the podcast page. You can look at our old episodes, listen to our old episodes. You can subscribe to us on Apple Podcasts, Spotify, or Amazon Music. So, since President Trump's tariffs began dominating the financial news earlier this year, many of the people who make a living debating the likelihood of a recession are saying that these tariffs may very well cause us to fall into a recession in the United States. But for now, the United States and China have agreed to slash those tariffs for 90 days while they can negotiate a little bit longer, hopefully to put together a longer term agreement. So there's some renewed optimism that we may be able to avoid a recession. So during today's episode, we're going to discuss that 90-day pause and then also talk about how a recession may be less likely. But before we dive headfirst in today's topic, let me introduce my co-host, Tony Shore. Tony, you agreed to do the show with me and you don't even charge an extra tariff, which is so nice of you. I'm very appreciative of that.
Well, I'm the same price I've always been, cheap. Uh, but Ken, seriously, thanks for having me on the show. I should be paying you to be here. I always learn something from you, and we have a lot of fun. So this is a good time, but great information each and every week here, I think. And recession fears, I love how if the markets drop at all, some talking heads out there, you look at your phone or the 24-hour news channels and they're talking about recession. So
Yeah.
it is interesting. The sky is always falling. If you follow the news media, don't get caught up in that. But you're right. I mean, we did have a dip there in April in the markets, and people were unsure about consumer confidence. So they were looking at a possible recession. Some people were talking about how that could happen. But trade deals are being made, so they're backing off that a little bit. So far, we're holding it off, I guess. Um, this is going to be great. First, though, Ken, how have you been? We had a big long weekend here last weekend. How did you do? What happened there?
Managed to dodge a sunburn, because I always want to look my best for you. Um,
Right, right.
yeah, just a bunch of sitting around. We normally go camping, but we just decided to relax at home and get caught up on stuff. Did some swimming, but nothing, nothing too exciting. We had some people over, but we lived to tell the story. How about you?
That's funny. Oh, I had a really busy 3 days, and I did get some sun, although you can't tell. For our viewers out there watching the YouTube, you can't tell, but yeah, Saturday was my daughter's graduation from college, and that
Oh,
took up
wow.
the whole day. We're very proud that went well. Family, friends, things like that, and her graduation ceremony. Sunday, I drove down to see my parents. It's about a 3.5 hour drive each way, and had to go down and back same day. And then Monday, that was Sunday. Then Monday, had to get up early and move my daughter and her roommate out of their house. So that was a long day as well. So I need a
Wow.
break. I need a vacation from my long weekend, is what I need.
Vacation from your vacation.
Right, exactly. I know a lot of people often feel that way, but I've just had a lot going on. But your schedule makes me feel good about mine. You're always so busy. You've got a lot going on there. But we've talked about tariffs before on the show, Ken. I'm excited for this topic. Where are we at right now with this?
So just to sort of update everybody and rehash it, about 2 weeks ago on May 12th, there was two high tense days of negotiations between the U.S. and China. And at the end of it, they decided to hit the pause button. It's been a pretty brutal trade war by anyone who watches these sorts of things. So the 90-day stand down, it's going to cut tariffs significantly on both sides. In some cases, dropping it by over 100 percentage points. So that is not just a little tweak. Some may call it a full reset. That's actually what President Trump called it. He called it a total reset with China. And he said he's probably going to talk with President Xi later So if that conversation continues to move forward, just going to lay more groundwork for more progress. But here's what it means in plain terms. The U.S. tariffs on Chinese goods are falling from 145% down to 30%. And then China is slashing their retaliatory tariffs from 125% to just 10%. So that's a game changer for anybody who builds stuff or buys or invests or exports or imports. It's a really, really big deal because they were pretty much at a trade standstill with tariffs that high. So we think it's a signal. It's basically telling the market and the business community that progress is possible when cooler heads prevail.
Yeah, when cooler heads prevail. I love that. Well, hopefully they will. I mean, that's what caused all the market fluctuation and recession fears in the first place is some wild back and forth with an escalating trade war. But now that things have settled down and maybe cooler heads are prevailing, the market certainly has reacted favorably to this news that China and the U.S. reached an agreement, and the U.S. and the U.K., right?
Yeah, yeah. When it comes to tariffs or just about any issue, the stock market loves clarity. And they also like it when there's some signs of progress, like things are getting better or things are getting cheaper. So this deal gave them both. The moment the news hit, the US stock market futures, which is basically pre-market trading, those just shot up. So it's a real meaningful de-escalation, the results of this meeting. And
Right.
we are looking at it as it's not just necessarily a pause or like it's not a ticking clock. Once the 90 days are over, it's possible that they could extend things a little bit farther because there's a lot of details to go through and try and figure out. So as long as both sides continue to show good faith and stay engaged, we think that this is going to continue to move the needle. Both countries actually released a joint statement, which that's sort of a rare thing these days, especially between the U.S. and China. So they basically said they plan to keep the conversation going, and they're going to have meetings in the U.S. and some in China. So that's some momentum and good diplomacy.
Well, it is good diplomacy, and I think that's really this is all good news, right? I like it. And you've talked about this progress that we've made with China, and hopefully we'll make progress negotiating long-term deals rather than just every 90 days there's market fluctuation because nobody knows what's going to happen. It would be nice to have a permanent end to these tariff battles. What's next?
Well, something that surprised a lot of people in a good way was that fentanyl became a central focus. One U.S. official even called it the upside surprise of the weekend. So the Chinese showed up ready to talk. They sent a deputy minister there whose basically whole goal was to talk about this issue and make sure that the United States knew they were, they meant business and they're serious about it and trying to help. So all of that being said, the U.S. put a 20% tariff specifically tied to fentanyl, and that's still in place. So even after this weekend of good news, that's still in place, and that's why the U.S. tariffs are 30% and China's are only 10%. So the difference is that 20% fentanyl sort of penalty. So there are other things that didn't change also. Some of the sector specific tariffs, so like electric vehicles and steel, those tariffs were put in place by the Biden administration, or at least before the current administration. And those are all staying put. So those didn't change on the May 12th announcement. But the main takeaway is that this was a really solid first step, real progress. And it's a good time to note, if you have concerns about these trade deals or concerns about tariffs, how it might affect your retirement assets, it's a great time to reach out to your financial services professional and just talk to them about these concerns and ask questions. That's one of the whole points of creating a financial plan, is that you can lean on it when things get bumpy or when things get a little bit murky.
Well, yeah, exactly. And that's where you come in. I know this is something you help your clients with. You need to have a plan in place, just as once again, the US and China. I'm glad you clarified what's going on there because, again, I just hope that we can negotiate a permanent end to these trade wars because that would help smooth things out in the markets, in the economy. So that's great. What do you have for us next?
So there's a couple things that look like they're still up in the air. So one of those is pharmaceuticals, and there's a couple other areas that are really important. And that's basically because the administration wants to bring those businesses back to the United States, bring the whole supply chain back to the United States. One thing that was specifically mentioned was antibiotics at one point. So, like the United States manufactures pretty much no antibiotics. So, if we got into a very serious trade conflict, it would be bad if no one in America had antibiotics. So it's just a part of a bigger conversation about what I like to call strategic independence. So there's like 5 or 6 industries where we've, as a country in the United States, have a lot of vulnerabilities. So maybe we're too dependent on overseas suppliers, or maybe we don't have a reliable partnership with the company that's sending us those materials. So the goal is we want to source them in the United States or get them from very, very close allies that we don't have such an adversarial relationship with. So none of this is going to happen overnight. This deal that we do have took days and really weeks of diplomatic posturing. So both countries, of course, dialed up the tariffs until they were unrealistic, and both sides were saying, the other side needed a deal more. They're sort of having a contest over who who was in the worst position, who had the worst poker hand, kept getting tossed around. But I guess that's how negotiations work sometimes, right? They're all trying to get leverage. It's not necessarily about who yells the loudest. It's really the one that focuses on the outcomes the most is usually the most successful. But good news is both sides came to the table, progress was made, and now we've got some room to keep moving forward.
Right, and that's really important. I'm glad that there is. Um, obviously, we've talked about this progress with the U.S. and China. I saw a headline yesterday that Europe is now working with the U.S. On their deal. We've heard a little bit of rumblings about that in the past week. So, is Wall Street then, because of all this news, Ken, thinking that a recession is not likely?
Yeah, so leading up to this, economists were really worried inflation was going up and it looked like growth, GDP was actually going down. But now with this 90-day pause, the mood's starting to shift. So economists are still forecasting a slowdown, unfortunately, because we do still have some tariffs, but it's not a complete stall out. So just talking about maybe an economic engine. The engine's still running, Tony. It might be in first gear instead of second or third gear, but we haven't
Sure.
stalled out. We don't
Okay.
need gas or oil. It's still sort of going. J.P. Morgan, one of their top economists, his name's Michael Ferroli. He was actually one of the first ones to say that we were going to have a recession. He was ringing the bell pretty loudly that the tariffs were going to cause a recession. He has now said that the odds of a recession have dropped under 50%, which is great. Goldman Sachs and Barclays, they're both dialing back their doom and gloom, and they're saying that there's a good chance for some resilience for the U.S. economy. Goldman Sachs, they lowered their odds of a recession from 45 down to 35. And they actually increased their GDP prediction too. So they think that the United States is going to grow by 1% in 2025. Before it was only 0.5. I know that doesn't sound like something that's worthy of a big fireworks show, but in a year like this, any good news is good news as far as we're concerned.
Yeah, well, that's great. That's true. That's a good point. So, what's the lesson in all of this, Ken? What do you have for our listeners out there? What can we glean from it?
I guess at the end of the day, tariffs are at their core just a tax. And this is a tax that everyone was assuming they'd have to pay in some shape or form. So when this is removed, when this tax is removed, it's basically like giving the economy a $300 billion tax cut. So originally that was going to disappear into taxes, higher prices on everything from electronics to groceries. And now that money's staying in our pockets. So just keep in mind that in the big picture, this trade policy, this isn't just headlines. This isn't just for the talking heads on TV to debate about politics. This would have really affected grocery bills, your portfolio, and really any long-term plans that you have.
Well, so the news that a recession is less likely, has that helped the economy at all? Have we seen any impact yet? Is that going to help things moving forward, do you think?
Yeah, so just to sort of give a summary of tariffs. So when tariffs were high, we were already starting to see slower cargo shipments going into the US. And that's more than just a logistics or a freighter or a truck driving issue. It potentially is the start of a chain reaction. So higher prices from tariffs or taxes will affect supply and demand. So the fewer shipments that are coming in, that means lower inventory. With supply and demand, the less supply that we have, that typically means prices are going to go higher, which means consumers start pulling back. And then when consumers start pulling back on their spending, then businesses start to feel it. And then once businesses start to feel it, hiring freezes hit and then layoffs start. So it's a chain reaction that we want to avoid. So the recent negotiations can completely reverse that chain reaction. So, let's be honest, all these economists on Wall Street, they're making forecasts, but they're just forecasts. We don't know if they're going to come true. The risks are still out there. We definitely acknowledge that the labor market looks like it's cooling off a little bit, and we're still keeping a close eye on inflation. But in our opinion, the tone has shifted. There's some optimistic outlooks out there now, and the stock market's responding. And it wasn't that long ago. If we just look back to April 2nd, after the big Liberation Day tariff hike, Wall Street was in absolute panic. 10 different major firms slashed their guidance for where the S&P 500 would end the year. The recession odds jumped. So it was a very, very jittery time. Now they're reversing course and getting more optimistic. And just as a very short-term prediction here, in our opinion, the stock market is maybe almost gotten too hot. So it's possible that we could see a little 2%, maybe all the way up to 10%. I don't think it's going to be quite that high, but the market's due for just a little bit of a cool off. But then after that, after it takes a little breather, we wouldn't be surprised if the market hit a new all-time high in a few months. So anything's possible, of course, but that's the way things are coming across our desk right now, Tony.
Well, Ken, I appreciate that insight. I mean, obviously, no one has a crystal ball, but you're right. The market is due for a correction. I mean, we saw a little bit of one in April, but that was really just a knee-jerk reaction to the announcement of 140% plus tariffs on China, but and Mexico and Canada and others. But however, I think that with that cooling down, we're still due, they say, like you just said, for a possible correction, because we had 2 years of all-time highs with really no correction, in 23, 24. So it is interesting. Corrections happen. They usually happen more than once a year. So usually, you get a couple where you see a 9%, 10% drop, and it doesn't mean we're necessarily headed for recession. That's just a market correction. I'm glad you clarified that and pointed that out. Is there anything else you want to add before we sign off today?
Just real quick, sometimes I feel like the stock market is a rubber band. So like if you pull a rubber band down back in April, it was way too low and it was due to shoot up, and it has shot up. Now it's maybe due for like a little bit of a drop, but we are starting to see what we want to see, which is a slow, steady movement in the right direction. So anyone who would like more information about the stock market, about creating a retirement income plan, having a tax analysis done to see if they should move some money from IRAs to Roth IRAs, maybe buy low in this tough environment, give us a call at 586-226-2100 or visit us at our website, www.summitfc.net. We'd love to talk things over with you and do everything that we can to help.
All right. Well, I'll tell you what, Ken, this is an important topic. A lot of people watching this one. And the listeners, thanks for tuning in. That does it for today's episode of Money Talks with our host, Ken Wink.